Hi, this is Darshan Bhatt from Glovista Investments with our market outlook for the week beginning August 2nd. This past week, the macroeconomic calendar out of the US pointed towards a moderating activity environment, as evidenced by several weaker than expected releases, including the US Market Services PMI, new home sales, durable goods orders, Q2 GDP, as well as jobless claims. Conversely, the macroeconomic data out of Europe and Japan continues to surprise positively, whereas the macroeconomic data out of China remains more tepid. Despite such weaker than expected economic releases out of US and China, the outlook for the second half of the year continues to remain of a strong growth environment as the pace of vaccination across the globe is picking up. The mobility indicators continue to remain resilient despite a rise in Delta strain COVID viruses. The financial conditions remain exceedingly loose, and the household's ability to spend continues to remain strong owing to high savings rate. This past week, from a market's perspective, the focus centered over US large cap tech sector earnings and policy developments out of China. On the US large cap tech side, we saw Microsoft, Apple, Facebook, Amazon, and Google report their earnings this past week. All of these companies reported earnings that were significantly higher than consensus estimates, while tempering the outlook over the next few quarters as the bump in growth that we have seen owing to COVID moderates and the business environment becomes more normal. Owing to this moderation of the growth outlook, the tech stocks pulled back this past week, with the Nasdaq index declining by 1.1% and the S&P index by 37 basis points. Despite this pullback in the headline indices, the breadth within the market continued to remain exceedingly strong, with the S&P 500 equally weighted index and the Russell 2000 small cap index rising by 63 basis points and 75 basis points respectively. On the China policy development front, this week brought about more stabilization as the Chinese authorities tried to calm down market fears. We believe the recent rise in China equity risk premium will fade gradually over the next few quarters. Although this week's outperformance by value-oriented sectors was primarily driven by weakness in tech stocks, from a medium-term perspective, we continue to like value-oriented sectors and markets, including US financials, industrials, materials, emerging market equities, and select US large cap stocks. From a macroeconomic calendar perspective, this coming week, we shall see the release of US ISM manufacturing and June non-farm payrolls out of the US. We will see the June industrial production, retail sales, and factory orders out of Germany. We will see the June industrial production out of France. Out of Japan, we will see the June leading index as well as the labor cash earnings. Whereas from emerging markets, we will see a host of PMI indicators. Thank you for listening and good luck.